What's going on, guys? What's going on? What's going on? Okay. Okay. What's going on, guys? Let's give everyone a couple minutes to start up. Happy Sunday. What's up, Warthog? How are you, man? Jeremy, what's going on? Hey, guys. Hello. Let's give everyone a few minutes to jump on. Tiffany, how are you? Happy Sunday. Pretty excited for this session. Lots to cover. Should be great. This is a public session, so I did put this on social, so we should get a nice crowd today, hopefully. Lots to study for this week. Tons of great chart setups, as well as some craziness in terms of some of this strength that we've seen in the markets, I think, which has been completely off sides for a lot of it. But yeah, we'll talk through a lot of that today. What's going on? James Wiggin, Jeep for Life. How are you? J Currency, what's going on? Hello, Tech Team. BB, hello. What's going on, guys? Welcome to the stream. Just give everyone a few minutes here. We usually like to get started, 4 or 5 minutes in when everyone gets on board, and we can get going. Just give everyone a couple minutes here, and we'll get started, guys. Live now. Dun, 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 dun. Okay. What's going on, Jeff? How are you? From Toronto. Awesome. What's going on, man? Jay Togs. What's going on? Superflow Hollywood. What's going on? Hello, everybody. We have about another 30 seconds here and we'll get started. Really appreciate everyone's time today. Should be a really good session, though. So these sessions always help me in terms of preparing for the week, preparing for the week's, months, quarter coming up. So hopefully they help as well for you guys. We'll also do a quick 10-15 minute Q&A at the end. I'll walk through sort of today's topics discussion in a second. What's going on, Drew? What's going on, Mike? How are you guys? Awesome. Yeah, I see people starting to trickle on now. May have taken a second, and we'll get started with the live feed. Muhammad, how are you? Awesome. So I'll start to jump into it. Basically, a couple things today. 6 topics I thought today to discuss. One, for anyone, well, I guess before I jump into it, I'm Spud from Spud Zone. If you guys are new followers, new members, etc., you can follow me on Webull, follow me on StockTwits. Those are the 2 areas. I'm pretty active on social, studying, teaching, educating, all across there, looking at the markets, etc. If you guys are new to the stream, first off, welcome. Great. Thanks for taking the time. Feel free to leave a like or subscribe to the stream below. These study sessions I put a lot of time into these, and obviously I do them for free, and a lot of our members love it. You can also follow us within the Discord itself. That's Spud Zone Discord. We have options, small caps, large caps, equities, everything sort of under the sun. You can check out some of the trade ideas in there. I specifically trade for myself with my own money. I'm a retail trader. Based on everything I do, based on technical analysis for the most part, alongside some momentum. You can follow my trades, trade ideas, market analysis, etc. on some of the channels I mentioned. Before I jump into it, I guess today's discussion, I want to jump through about 6 topics. The first topic being basically my 3 rules before I take any trade. That could be an option. That could be just straight up long or short equity. And I'll talk through some of my my rules and things that I live by. And I know I've shared this a ton over the years with many folks, but I thought it might be a refresher as we probably have a lot of new members and sort of new followers and subscribers sort of jumping on stream today, which could help you within some of your trading aspects going forward. So I thought we'll start there. Number 2, the usual guys, every bi-weekly meeting we do is we cover the index topical coverage, I like to call it. And that's just covering SPY, QQQ, and Dow Jones. And we like to look at, what's performing, what's underperforming, where we are from a technical basis, where we are on the chart. If we're on a run right now, which we are, where can we maybe top out? Where can we look to take some profits? Maybe where can we look to reject? Maybe where are there support? So we'll walk through everything from a technical standpoint. Then we're going to jump into some commodities. Gold is really outperforming lately, which is quite weird because the equity market's going up with the gold, sort of the gold index and ETF. So that's usually a very weird sort of tail sign for me. Usually gold's a good sort of hedge. The fact that gold's continuing to go up while equities are going up, something weird is definitely going on. Then we had some big oil news come out over the last couple of days. Saudi Arabia's cutting oil production, barrel production, Russia, along with some of the large other suppliers as well. So definitely going to keep an eye on oil and some of the oil names for the upcoming weeks. It sort of bottomed out a couple weeks back. Some major capitulation in the oil in the 60s actually, and it's now back into the 70s, but could see a potential run up there short term. So definitely keep an eye on that if we're continuing to see sort of cut in production there. Then we're going to jump into the 4th topic today, guys. Basically, example of strong intraday price action. As many of folks who've been following me over there, you guys always see me talk and post about price action. Typically, I'll post a chart and I'll show basically what good price action looks like. And basically, that's what I look for when I like to trade strong price action. That could be strong price action to the upside, or that could be really weak price action to the downside, right? Something that has an easy trend to follow. As a trader, you want to be looking at trends, something that's just easy to follow, where there's a high probability of that trend continuing, right? And so we'll talk through the price action for about 5 or 10 minutes. And then topic number 5, for a lot of the folks that don't day trade and we're looking for more swing trade type sort of examples, not a huge swing trade person, but over the last couple weeks, there's been some potential really great swing trade setups. And I'm going to talk through 2 specific examples of one that has actually already panned out and worked out well. And then I'm going to talk through another one that sort of looks like it's setting up to be a potential sort of short-term swing trade. And then 6, guys, we're just going to jump into some Q&A because I know there's a lot of new folks here, as well as some experienced folks who've been obviously following over the years. And you guys could just pop in, answer some questions. I'll try my best to answer everyone's question and sort of get through those and just study together. And it's going to be a great session. Looking forward to it. So without any further ado, I'm going to jump into really number 1 here, topic number 1. And just going to talk through the 3 things that are sort of must-haves for me before I place any trade. And that could be an options trade. That can be just going long, just buying equity straight up. This could be a large cap equity. This could be an index. This could be a commodity. This could be a small cap, right? So this could be anything, just any trade that I would particularly make. First thing is liquidity, volume. Is there liquidity? Is there volume in that specific index, equity or commodity or ticker, whatever I'm buying, right? Is there enough to get in? And is there enough to get out without any type of worry about a volume or liquidity, right? So something that's trading a lot of volume, something that you can easily get in and out of. That's my first thing I always look for is volume. Is it liquid enough for me to enter and exit a trade at any given moment? Second thing is I like to look for range. And that's what I call range percentage. You'll see me post a lot about range percentage. What that basically means is that throughout a period, let's just keep it from a intraday perspective, which is a day trading for all the new people, which is basically a day trade, right? Think about it as a day session. So the bell opens 9:30, bing, 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 and the bell closes at 4, right? During that day, is there a lot of range percentage? Basically means, is there a lot of volatility or movement within that particular equity or index or stock? right? And we're going to talk through that. So that's what I look for next. Is there range? So let's say I'm going to show some examples of all this. Do not worry, but I'm just showing you guys my 3 simple things that must happen in a trade for it to be a really good trade setup. Is there range? Is this particular, let's say for example, stock moving up or down throughout the day? In a sort of a large gap, right? The last thing is stop loss. For me, I don't really trade without stop losses, and why? Is that over the years I've found that using stop losses saves me a ton of time, stress, and capital. And really the main thing at the end of the day as a trader is I want to save my capital. I want to have enough capital to trade the next day. And so once you really start to minimize your losses, the best traders in the world really probably win 60% of the time. The best traders in the world, they probably lose 40, 50% of the time. But if they keep those losses extremely tight and incremental, those winners can be huge winners, letting your winners run, scaling out at certain times. And so, finding a stop loss to my comfort zone where I'm okay risking capital to a certain level on that trade, right? Maybe a stop loss is 3% or 5% or 10% on that given day trade or swing trade, right? The instant it starts going below that measure, maybe it's a mental stop loss, you don't have a real stop loss, that's when big losses and underperformance really start to occur. And that's obviously my experience. And I'm sure many out there have similar experiences. So that's the third thing when I look for before I take any trade, knowing where I want to have a stop loss. So maybe I'm buying a support dip at $1 a share, right? Just for easy example. Maybe I want to have my stop loss at 89 cents or 90 cents, 91 cents, a little below 8 to 10%. If it gets below there, maybe there's no support underneath. And, I want to be out of that trade if it continues, if I didn't time it well, or maybe I didn't perform well. Maybe it kept going, there was more selling. Or maybe I was shorting a top and it kept going higher and higher. I want to cover and take my loss early. So you always want to have that sort of mental or even a firm stop loss ratio, for me at least, right? And those are the 3 things. So I look for liquidity and volume, right? Easy to get in and out of something. 2, I look for the range, right? You want to find range. I'm going to show you guys some really key examples, and you're going to be like, whoa, okay, this really makes sense now. And then 3, sort of where you want to stop loss. What are you willing to risk? And it all comes back to sort of risk management. How to move a stop loss up, maybe move it out, and be able to sort of be nimble around that. So those are the 3 things for topic number 1. Let's jump into the index coverage today, guys. We're going to start with the S&P 500. And as you guys know, I like to basically use the same chart for probably almost the last year now. And I just basically move things around and just show you updates and where we are. And so just starting with the S&P 500, guys, which is referred to as SPY, SPY, as I'm sure everyone knows. I'm going to walk through. There's a lot of new members here. Each of these orange boxes are actually peaks. And this extension line shows you that we have actually peaked on every bear market cycle throughout the last year and a half, 16 months per se, maybe. We have peaked at the exact penny or pivot point on this extension line. And it's quite funny because everyone was expecting this peak again around 380 and then maybe a new low into here. And we actually got a blow through the extension line to the upside. And so now we're sort of consolidating and moving, gapping up higher. And it's sort of breaking out of this downward trend, right? So peak here, drop, recover, bear market rally, drop, new lows, peak, drop, new lows. Now we've peaked and sort of based higher. And so now it seems like the lows of that 350 are sort of in right now. And it looks like the market wants to scream a bit higher. And so if we're seeing that, what are our next levels? And so this is a weekly chart look on the S&P 500, the SPY. I'm seeing the next potential gap, which is basically where the last big bear market rally ran to, is about 420. I know there's a lot of traders, macro folks technical traders calling for that 420 mark. Typically, when a lot of people call for that mark, it never really gets there. So as we start to maybe gap up this week, if we gap up again, continuing, it's been quite a crazy run on the weekly chart here off the bottoms. If we start to get into that 410, 415, 420 gap, it's probably a good opportunity to maybe start to scale out some profits in that zone. Once we start to get into this zone, there's a lot of overhead supply. And keep in mind, as you continue to buy equities or investors continue to buy equities at these levels, you're basically paying a higher premium and valuation for every company that's in this index, right? So you're paying for higher, basically forward earnings. And so if you believe that the earnings are only going to go down from here over the next 10, 12, 16, 18 months, you're just continuing to pay a higher premium. And that's why you're seeing a lot of sort of folks say, I'm all cash. I'm waiting for SPY to get down in here, 350, 330, 300. I don't know if we're going to get there anytime soon. We could, these markets are extremely volatile. We don't know. But we all have to look at technicals, and we have to respect what I call price action. And so the price action for the S&P 500 has been pretty good lately. It's actually underperformed QQQ, which we're going to talk to next, which is basically the NASDAQ. But in terms of my levels to the upside, I'm seeing 415, 420 as sort of the next two short-term levels. You get above 420, and the next orange box is really at that 430 level, 433, 435. It's another area I think if you ever get there, it's probably want to really start to scale out, maybe even pivot into longer-term puts. Anything in here I think is a good risk versus reward for the downside. As you start to get up there, I think it's going to get really heavy, the price action. In terms of downside, I'm seeing the bottom of these candles. We saw some major support in sort of the 380s, 390s. If you break down below 390, there's a ton of downside risk. Once you get under sort of the 200 moving average here, there's some real downside risk in this market, down into the 370s, 60s, 50s, even 330s potentially to the downside risk off. So that's where I'd be looking at from a downside perspective. But right now on the weekly chart, we're still in sort of this bullish candle upwards. And as I mentioned, I think the short-term targets maybe around 410, 415, 420. Those would be sort of the levels in my head as I'm trading as things are going higher, if they continue to go higher. If we look at the QQQ, this thing's been a monster. This is same thing. I'm going to walk through, guys. Vertical chart here. Extension line here. Basically from the all-time highs of the NASDAQ here. And we've basically pivoted to the penny. Same thing. Topped out, recovered, topped out, new lows, recovered, topped out, new lows, right? Recovered, same thing. But now we're way above this extension line, and the key pivot was actually here where my lines sort of crossed in vertical and the horizontal and extension line in here. And we've been trading above this the whole time. If you get back below here, then you're sort of really bearish. But everyone's been sort of running into mega cap tech. Everyone's been buying high beta tech. You can see the investors. You can see the price action. You can see how strong the action's been on the weekly level. If we take a look at the daily chart, we're actually now breaking above my trend lines. So my second trend line here was a double top, triple top, and you're sort of getting above this resistance level. I call this sort of a demand supply zone, and you're really showing that there's a lot of demand here, whether that's FOMO, whether that's chasing, whether that's shorts covering. I don't know. Could be a combination of everything. But we're sort of breaking out over this period. Now, the next big resistance for the QQQ guys is around 330 a share. And right now we're in that gap. So I would not be surprised if the QQQ continues to rally through 320 into the 330 zone. Then you start to get sort of a little bit of a heaviness flow probably in here as you get to 330. Things start to get a bit more expensive. So keep an eye on that. We're currently literally in the gap. So this whole particular area right in here has fill potential. And that would bring us back to the August highs of 2022. So about maybe 10-month highs. Oops, I did not mean to move that. There we go. Which would be sort of that pivot point in here. Another area where I think you probably want to start to scale out some longs, maybe pivot for a rejection or maybe some puts longer term in this spot. You could see a technical pullback after we fill up in here. So that's a QQQ. Dow Jones, I'll quickly cover. Actually, before I jump in, I want to jump back to SPY real quick. I want to go back to the daily chart. I think this is really important. If you look at the last 5 days, right? 69 million shares, 77, 62, 74, right? The volumes actually were much, much less than about 10 days ago. 189, 157, 150, 172, 143, 140, right? And then we just sort of, volume just kind of, literally decreased. I mean, we're trading a third or a half, volume has just sort of disappeared. Friday, it was a little bit better. I think there was probably some short covering in there, which was causing some of the buy side. But volume has just been non-existent in here. And we've been seeing this pre-market gap up on no volume. And it seems like sort of a bait and hold. And we continue to push on no volume. What you want to see for a real sort of back to a bullish trend is big volume days going up in. Big inflow days, and we're just not seeing that. So that gives me a little hesitancy on this rally here that no one's really bought in for it. And so it scares me because, the next couple of weeks, if you start to see some big sell side volume, I mean, we could easily just go back and retest that 380, 390 level rather quickly on the SPY. And that will just be only because volume starts to come in again. And so I'm a little hesitant with this sort of low volume rally that we're seeing right now on the daily and weekly chart. So just keep that in mind. You always want to look at volume and liquidity, what's going on out there, because good traders, professional traders, traders on the street, they're all looking for liquidity, and liquidity seems to be really tight right now. There's not a lot of people looking. There's not a lot of people putting a lot of capital to work in a lot of these indexes, and you can see it within the flows itself. There's a lot of people putting capital to work in tech. That seems to be sort of the safe haven trade right now. Everyone's sort of hiding there right now. Don't know how long that trend's going to last for either. We saw all last year people were hiding in the dividend names, and those names have been fully underperforming this year. So there's a lot of switches going on. It's really tough to trade. There's not a lot of easy trends, but we're talking through a lot of this. Dow Jones, same thing. We're sort of above the trend line. I actually think that Dow Jones could potentially set up for a really big trade or really good trade opportunity if we get below this 320, 325 level, or that would be sort of like that 32.5 level. Right now we're above 33,000. So if you get to that, 32,000 ish, look how much downside opportunity if you break below 320. So about 32,000. You get below in there, there's a lot of downside opportunity for a trade in there. And so I've been watching this trade for probably all year long, because it really shows you that if we get below this 200 in the Dow Jones, I think dividend names could start to take some hits here. And I think you might see some pullbacks during earnings seasons. So just keep an eye on this sector. I think there's some opportunity down, as it's also been underperforming this year and tech's been overperforming. So keep an eye on this. As I said, we're currently sort of in this gap resistant range as well, all the way up to 3,400, 34,000. That's where I'd probably be also looking to be a seller at 34,000. Okay, so that was basically, we talked through index topic coverage, got through that. It's great. We're on time right now. Next thing I want to talk through, guys, is sort of gold and oil. It's really crazy to me. If you look at gold, January 1st, we did a big study session, guys, on gold, and we talked through the outperformance recently. If you look at gold, let's take a look at this weekly chart. It's quite impressive. We're hitting a triple top on the weekly chart, and it looks like it sort of wants to break out into the new all-time highs, 190, 200. This is the gold index, by the way. This is just fairly, everyone knows GLD. It's not a minor, it's just gold itself. This is all the way back to 2011. Gold peaked at about 184, 185, and that's where we are. And if you look at it, gold's been underperforming for almost a decade. Gold has underperformed for almost 10 years now. A couple quick quotes on gold itself. We've seen China been buying records amounts of gold in their central bank and reserves and all that. So that's one bullish catalyst to it. Two, we've seen record inflow in 23 years, the most inflows into gold this year. So there's a lot of demand for gold as people are not trusting the dollar and how inflation's getting extremely high. People are sort of safe haven in gold. And you could see it within the inflows, right? It's trading around all-time highs. So I think gold can be poised for a true breakout here. And it's underperformed for 10 years. It hasn't done anything. So maybe this is the year or two next year for gold. I mean, we could potentially see gold break out over 200. I think once you get over that 190, 200, I think this thing could really start to run. And so gold has been a top watch, only because we're starting to test those 2011 highs and we're fully breaking out. So the key level breakout here is about the 185 to 190. You start to break out of that zone, and this could be continuing being a really bullish monster. So keep an eye on GLD. In terms of oil, I talked about it. I think oil may get a short-term recovery this week. You're seeing Saudi Arabia cut 500,000 barrels, Russia 500,000 barrels, same thing. Per day. So you start to see a lot of oil barrel cuts, and I think if the demand's still there for oil, the price is going to jump up. So keep an eye on maybe like your Oxys or your Chevrons, your Exxons. So these charts are all pretty bullish from a weekly standpoint. You look at the daily chart, Oxy, it's been in this really tight range. Not a fun one to trade in my opinion. It's very back and forth. Warren Buffett owns a ton of shares. I mean, I don't know why he just doesn't buy the whole company, but just continues to take larger stakes. It doesn't really make sense to me, but he continues to just buy at will. So he's quite bullish on this oil name. So keep an eye on this. Oxy is always a good one to monitor if you're pretty long on bullish or pretty bullish on oil. Excuse me. So cool. That's topic 3 there. Just wanted to touch on the gold and oil trade. Gold is extremely strong right now in terms of inflows because of what's going on. You've also seen a bid for Bitcoin, so you've seen sort of that inflationary hedge. You've seen banks crashing and gold has been skyrocketing. Bitcoin's been skyrocketing. So those have been going together, but it's quite interesting to see those two go up along with the broader markets. So something needs to budge, some trend needs to break. So I think we'll probably start to see that over the May, June, August timeframes. Let's go examples of strong intraday price action, okay, and range percentage. And what I mean by that. So everyone sort of get your pen and paper. I'm going to talk through like just examples of what really good price action looks like from an intraday level. So I like to trade on the 5 minutes. Let me just make sure everyone's following along here. Excellent. I like to trade on the 5-minute sort of intervals when I day trade. So I wanted to take a look at ticker AI just because it shows a really good example. Had a monster breakout Friday, did not trade it at all, but just kind of want to walk through what really bullish price action looks like and how you can potentially take advantage of a scalp or a day trade on this name. So here's the bell, 9:30, get a little dip, get a little, you sort of get a little rebalance here, right? It dips a little bit and it starts, right? Then it pops over and then we pop over its sort of pre-market range. So, okay, new buyers are showing that there's some buying going on. Cool. There's a dip. Then we start to get into what I call the staircase channel, right? Once we break over the pre-market high, new traders say, oh, okay, like over 27, 28, this might be bullish. Maybe I'll see a move to 30, right? So then you start to see some demand in here, a little chop, and then people start buying the dip. Volume starts to come in, and look what happens. The name starts to sort of channel upwards. I call this like a stair step high. We get a 1, 2, 3, 4, 5 candle, then sort of a consolidation, like a 1, 2, 3, 4 candle. Consolidate, people want to consolidate, and then bang, we see a rip past the highs. Now we see a new HOD, which is basically a high of day, HOD, high of day. We see a new HOD, consolidate, and we get a bang, 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 2, 3 candle stepper. And this continues to make new highs, but what's impressive about it is every time it dips, there's now a much higher low. So every time it dips, all you see is the dip algo just continue to buy up shares. Then we see a monster move, 2% candle. This is the 5-minute chart, right? So these are big moves on a 5-minute time frame, a full percentage, 2 full percentages, right? So that's what I mean by range percentage, right? So you're seeing a big range gap intraday, right? From 9:30 to 11:30 in 2 hours. The stock went from 27.50 all the way up to, let's just say 32 to round up right in here. 2 hours, the stock went from 28 to 32. That's $4 a share with bullish price action, right? This is the stair stepper 5-minute chart. Then we sort of get consolidation for the next 2, 3, 4 hours because it made such a big move out of the gates. So if you're sort of buying in here, you're probably selling in here, right? You're buying this sort of the confirmation. Okay, I know this is going to go higher. I could see the price action. I'm selling into the strength, right? 10, 15, 20%, 10, whatever it may be at percentage in here, right? Calls are probably up. If they were lottos, probably up, 3, 4, 5x, maybe next week's up 2, 3x. So like there's a lot of movement going on this name in there, right? Then we consolidate and then the end of day, we see sort of that squeeze potential. We go all the way to $34. From a dip of 32 to 34. So then we break out into end of day. Why did we break out into end of day? Anyone know that answer? I'll tell you. You consolidate at the day highs. So anyone selling or trying to short this all day long is in the red. It never dropped back down to the 29.30s or 31s. It just consolidated at the all day highs. And then this move in here was the I'm out. If I'm short or selling, I'm out. I gotta take my loss in here, and that's why you see some big moves, 5-6% there into close, because people said, okay, I'm shorting this all day, and now I'm underwater. I got no pullback. It consolidated around the high, so that's a really good trade idea. I like when a ticker consolidates in here, right? It trades sideways at the highs of the day. Only shows me that, okay, this could be a breakout into the day close, right? So if you're trading long this, you maybe put a stop around 32 again, where it sort of dipped, maybe even the stop at around 31.80. Because if it breaks there, you might go back into that you might go into a new downtrend back into 29.30, right? If it holds here, you probably can see a new high of day, and that's what you saw on this ticker name. So that's an example of strong price action. Now, this is just this past Friday, so it's really recent. I'm showing you guys like live examples almost, right? So I want to show you an example of not strong price action, like just not a lot of range percentage. Let's go to AMD. Close the day up 0.13%, right? Dipped down at the bell. Chips were under pressure at pre-market. Chips were under pressure at the bell, and they sort of got some bidders midday. This dropped to like 95, 96 a share and closed at 98. Yes, it bounced off the lows. You're like, okay, it probably bounced nicely off the lows, but all day long, it was choppy. It was choppy, didn't move much up and down, did not have a lot of range percentage, right? So this is a name, as I'm watching and analyzing, is a name that I wouldn't be touching from a day trade perspective. I'd say, just look. I looked at it and I was like, it's not really moving. There's not a lot of range, right? It's a little choppy. This is a trade that you probably get stopped out on short or long because there's not much movement, right? Comparable to the AI trade where it's just literally stair step higher and showing great range. So as a trader, that's what I'm looking for. I'm looking for the range. I'm looking for the volume, something that has a nice trend, stress-free trend. And this was a sort of a stress-free trend day where there was tons of opportunity to the upside, right? From an example from a bearish standpoint, right? Let's look at it a bearish standpoint. Ticker, what is it? GRRR, like a med cap, about 500 million. Let's look at a bearish trend line, right? All day long. Let's go through the 5-minute chart here. Here you go. This thing was like $11-10, right? So all day long, 9:30, we just started to sell out at the bell, down 7%, down 14%, right? Consolidate. More sellers come in, bang, down another 10%, down another 16%. So now we're down 30% in the first hour of open, and right here. So that just shows you a bearish price action, right? Selling, volume picking up, selling. And then we consolidate all day. Bidders came in, cat bounced to here, filled this 5-minute chart up to 550. Guess what happened at 550? Sellers came back in, and then dropped another 10 to 15% into close, right? So that's an example of bearish price action, but it still holds my definition and thesis of range percentage. Right? So there's people out there who love to trade long, and there's people out there who only trade short. And so if you're short and you're shorting equity, this would be a great name to grab at the bell and sort of ride down in here and cover, make a quick 10, 20%, same way as you would to an upsides chart. And that shows you there's a ton of range and volume to the downside. Obviously, shorting is more dangerous. It's quicker trades from an intraday perspective. But yeah, I mean, you can see it, right? So that's an example of bearish price action, but it still holds the thesis of having range percentage, right? There's a gap down there, right? So they're still very tradable. Okay, so those are 2 or 3 examples. Let's actually go through Tesla real quick, just from an example from bullish price action. Same thing. Does this chart look familiar as AI? Same thing, right? 9:30 happens, and this just gated up out of the bell. I mean, we just went right to explosion right out of the bell. Right? You see this volume candle, 6 million, 3 million, almost 3 million again. And then we sort of consolidate there. So people are saying, I'm going to buy the dip back. Maybe if it dips to 97, 96, 95. Never got there, right? Never got there. Consolidated here. And then we just kept ripping to new HODs, consolidated profit taking from here, right? Sell from buyers here, sellers there at 200. No surprise. 200 was 201, 202 was a resistance. And then mid to late day, the range percentage started to come in. 200 a share, 202 a share, 203 a share, 204 a share, 206 a share, right? What happens? Anyone who's selling or short in this zone now has to cover. You get the end of day rally, liquidity crunch towards close, bang, you get the new high of day up into 207s. See how that works? So all day showing bullish consolidation, bullish inflow, not dipping, right? Not rejecting hard. And then bang, you get the range. This closed up 6% on Friday. So that's a range percentage play, right? We compare that to AMD, which barely moved all day, right? So that's what I'm looking for, right? Tesla hits the criteria. Liquidity and volume, check plus. 2, does it have the range percentage? Yes, check plus. And then 3 would be, can you put a stop loss? Can you have an idea of where your stop loss may be, right? If you're buying in here, maybe your stop's right under this wick, 198. Never saw 198 again. If you're buying around 199, 198 for a 200 break, you never saw 198 again. You just ride your stop loss up with the stock momentum. Bang, you sell into strength there. $4, $5, $6, $7 a share move. Quite impressive, right? So that's a great example there of bullish price action, range percentage, liquidity, right? Goes back to my 3 must-haves in a trade. So hopefully that's helpful. And you guys I know there's a ton of people on viewing here. So it's great. So that's a good example of sort of what strong price action looks like. Let's take a look now, guys, into larger time frames. So studying larger time frame moves using technical analysis for swing trading, right? So how would you look at that? I have 2 examples. Let's look at Intel. Over the past few months, I've been actually calling Intel as a potential bottom. And why? It's all technicals for me, actually. Everyone was downgrading the stock, selling the stock, calling it the worst chip stock ever, blah, 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 blah. They still do 60 billion plus a year in revenue. I mean, way more revenue than NVIDIA, way more revenue than probably 90% of the chip makers out there. It's one of the largest chip makers in the world, and they've just been under pressure. The stock hasn't been run well. Company hasn't run well. But besides all that, let's look at the price action, because price action dictates market movements, right? I want to jump back to 2016, 2015, 2014. There's a lot of demand at $25, let's just say 25 even flat. There was a lot of demand at that level 10 years ago, 8 years ago, 7 years ago, right? What happened on Intel this year? Throughout the past 6 months, we've seen Intel hit $25 a share and bounce 3 separate occasions. And I call this the 3-step rule. And this is great for long-term swing trading, whether you're short or long. Take notes on this one because I've seen this pattern work a ton. All right, stock initially bottoms, people buy the dip. Great, sometimes you could catch the falling knife and get lucky and sort of maybe recover for a quick bounce, which they did, right? So $24, bounced to 30, people sold out from 24. That was a quick trade. Cool. Then we go and retest that 25, and the algos and investors and traders all said, okay, it bounced off 25 last time in September, October. Maybe it's going to bounce off 25 again in December. So now you get some bids here. It bounces again, and it retests 30, which now it creates a double top and a double bottom. So now Intel's trading in a really tight range, right? 25 to 30. 25 bounce, 30 reject. 25 retest, 30 reject, right? Now guess what happens? We reject 30 for the 3rd time. We then head back to 25 in March now, right? So 3-4 months later from the December lows. And we retest this 25 bottom. 1, 2. Now this, what I call this, a 3 bottom test at 25. That is typically, if you're trying to swing trade and you're seeing a stock bounce 3 times on the weekly, every 3 months it bounces off that low, odds are saying that there's a lot of demand there. You're going to maybe see a bounce and follow through. And why? If we look back to 2014, 15, and 16, we've seen the stock bounce a bunch off 25. So it's no surprise here. I alerted this one at maybe 25, take 1/4 starter size, multi-swing this, multi-year this, potentially down in this level because it's so cheap. It's back down to 2015, 2016 lows, right? And chips are pretty hot. You see NVIDIA up 90% on fluff AI stuff. So, I mean, the largest chip makers down, this is down 70, 80% off the highs, right? So, there's a ton of potential room to the upside on a technical level, just from a technical level, right? So we've seen the 25 hold for 6, 7, 8 years now, right? So it's kind of a, you risk off this. And if it goes lower, maybe you buy at 21, 20, if it really got cheap, 20, 21s where you sort of maybe do your second ads and you average into this at around 22, 23. But so far it hasn't got there. What we're seeing now is the triple retest and then a gobble here. And we broke out of 30. And this was a monster move last week. 11% for this name. This thing broke through a 1 top, 2 top, made a 3 top move, and bang, it broke through the 30 channel. I have my horizontal lines. This is from 6 months ago, these lines. And now we're breaking into the upwards channel. The next resistant line is right around excuse me, is right around $35, $36 a share. So we're now in the upwards gap. And so if we fill this gap, that's probably a great opportunity to scale out some profits at 35, 36 a share. That would be about a 30%, 40% move maybe even 50% move off that 25 initial entry. That's a big move for a swing trade, right? So that's how I'm looking at a swing trade, right? Bottom out, okay, quick bounce, reject. Bottom out again, there's more demand at the same bottom level. Okay, we flip back, then we reject for the third time. We finally formed the bottom base, and bang, we're ripping over the resistance at 30 here, and now we're in the upwards gap. So you might start to see technical bulls, technical traders, momentum traders start to play what we call intel here, and there's some gaps to the upside, right? You break 35, 36, you got a gap to 40. So there's a lot of opportunity here. Keep an eye on intel. It's going to be a top watch, especially how strong it was last week. The inflows were huge, and the volume was great, and the chart was great, and the candles were great. And this is the daily. Let's look at the daily chart, right? So we're in breakout mode here. Look at my daily line. All the way back to 2022. We're gapping. We're gapping above these resistant trend lines. And we're in the daily gap, as I mentioned, to 35, 36s. So keep an eye on Intel. This chart has already made a big move. So I'm not going to be, I wouldn't be a chaser here. But as you can see, if it gets back to 25, that's been a level where longs have really started to double down, triple down in the 25s. Excuse me, I'm already losing my voice. Next chart, which I think potentially, if this tech bid or high beta tech bid, or people start to continue to inflow into technology because they think the Fed's going to stop raising rates soon, this is another chart that is potentially looking like a positive for the upside. Let's look at ARKK, ARK. This is Kathy Wood's Innovation Fund. Let's look at this thing, because this thing sort of bottomed out at 30. Then it's making new lows, higher lows around 35. And now it's getting bid up into the 40s. And so 45 is a major resistance, and then possibly 50 for this bear market. Now, this thing has been in a full bear market. Even though QQQ's been ripping up, this is fully underperformed. So you might start to see some bidders here in the ARK performance here. So 40 to 45 could be a potential move. And if you break over 45, you have another gap, this bigger, larger gap into the 50s. So there's possibly, if this tech name continues on the weekly chart or daily chart, right? Let's look at the weekly. There's potentially 10, 15, 20% upside on this ARKK name before maybe rejecting to retest those lows, or maybe even breaking out to higher highs. So keep an eye on the ARKK. This will be a top watch over the coming days / weeks / months if this technology bid continues higher. Okay? So this is one of those that sort of looked like an intel to me before it broke out. And who knows? It may break out this week. It may break out next week. Or maybe it rejects and goes lows if the markets reject this week, right? But it's been a fully in a bear market underperforming. So do keep it, if this is a name, if I'm going to start trading this, I'd probably trade it through longer dated calls, like a couple months out. I probably wouldn't buy it via equity, because if it breaks down 5, 10, 15, 20% on the equity, I lose a lot more value there on the equity than, if I buy calls, I only risk what I'm buying in the call premium. So I'd probably be playing this for longer dated calls, multi-week, multi-month with tight stops. So that's how I may look to play that one in the coming weeks. So hopefully that's helpful. That gives you sort of like a pre-understanding of how I'm looking at longer dated price action moves. And Intel was a really, really, really good example of that sort of bullish trend breaking down. There were so many things in there, right? You had the triple bottom. You had the triple retest breakthrough. Right on the third retest, I call that third retest, and it powers through. We've seen that a lot with Tesla. So it's a lot of these trends you can start to see in repetition, guys, and then sort of trading becomes more natural when you start to see these moves and flows. So hopefully that helps you guys, especially the new traders. I know there's a ton on today, so hopefully that helps. But we're on topic number 6 now. I know I don't want to take up anyone else's time today. It was a great session so far. Hopefully, definitely leave some feedback for me. Anything you guys would much rather see or could work on, be better, whatever. Happy to take all criticism and positive feedback. So let's jump into the Q&A, section 6 here. And we'll do Q&A for about 10 more minutes, and then we'll close down the session and get ready for next week. But hopefully this session was great, sort of update where we are on all the charts. But yeah, I'll jump to some Q&A here. If you guys want to just write your comments your questions and comments, I'll try my best to answer some things. Try to refrain from asking questions about specific tickers so I don't have to jump to things and take up more people's time. So if it's more sort of, if it's more like a holistic approach, anything larger picture stuff, I'm happy to answer, try my best to answer. If I don't know the answer, I'll just say I don't know. I'll try and get back to you guys. But just shoot some questions on the right, and I or the tech team will help answer some of those things. And we can, close out the session in 10, 15 minutes if there's obviously no questions. But yes. And if you're looking for more, we have a full staff Discord, and we're there every day. We're studying, analyzing, a ton of analytical bots as well in there. So feel free to check us out. That's Spud Zone Discord. I know our tech team has posted the link a few times in the right column where the comment section is. So do click that. Check us out if you'd like. It is a premium Discord, so you feel free to check us out. Awesome. Joe, thank you for the session. No problem. Hopefully you really enjoyed it. But yep, we're on the Q&A, guys. If you guys want to shoot some questions on the right-hand column, I'm happy to do it. Mountain Man, any insight on banks? I didn't talk through banks on this session, but the price action and technical analysis on banks has been quite shitty, to be quite honest. Excuse my Frank, but it's been terrible price action. JP Morgan is a name that has earnings in 12 days, in the 14th. And if we can retrace on the daily chart, JP Morgan up a bit, back into the 135s, I think JP Morgan would be a great sort of short, or maybe some puts around 135. And how I'd buy this would be maybe like 1 or 2 months out. I'd be buying the maybe 125, 120 strike if we got back to 135, 140. It would sort of be like a cap bounce and then just a reject. And I think you'll probably end up seeing some new lows on the banks. Regional banks have gotten absolutely demolished. But yeah, so I'm looking at JP Morgan earnings in the 14th. But banks have been under pressure and the price action has been bad. There is a lot of shorts and sellers on the bank sector, though, so I would be a little bit careful on that. But obviously have your risk management and your stops in place. Jay Togs, thanks, man. Really enjoy your perspective. No problem. Hopefully it's helpful. Glad to see you continue to join. Thank you. I appreciate it. Jude's World, what scanner do you use and where would I find it? I don't use too many scanners. We have a lot of bots as well in the Discord. We use Trade Addicts. So Trade Addicts, I don't even know how you'd pronounce that. TRADYTICS. Trade Addicts, I believe it's how you pronounce it. They have golden sweeps. They have Trade Addict bots. They have insider selling, insider buying bots. So all this data analytical flow we get, that's really good for the large cap stuff and the indexes. In terms of scanners, you can use like a Webull Top Gainer. You can use a Trade Ideas, and sort of customize. If you're like into small caps and love to trade small cap stuff, you can always go use like Trade Ideas. They have a lot of great preferences like volume indicators, momentum, stuff like that. There's a lot of other stuff you could use. I think Benziga Pro's got some stuff. FinViz has always been pretty good. Yeah. Hopefully that's helpful in terms of the scanner stuff. That was Jude's World. Hopefully that's helpful. John Cochran, hopefully I'm pronouncing that right. Awesome show. Thank you. To use one or more default configuration / setups in Webull, could you provide us with your Webull default configuration? Yeah, I can look to maybe send some screenshots of some stuff. It's a little different. I don't really have a good configuration for the option stuff, but I do have one that I like to trade with the equity. Basically, it's the chart itself, so the chart of the equity or index itself, right? So what I was just showing you guys, like the actual Webull chart, that takes up about 80%. And then the right side of my chart, I have like level 2 going underneath, so showing all the buys and sells, where you could constantly see bid and asks. And then right above that, on my top right corner, I have the trade function. So I can quickly hop in and out of things on my top right trade function. So buy, sell, short, and you'll see those buttons up top. And that's sort of how I do it. So chart, which is mostly the main screen, analyzing the tape, right, from an intraday perspective. And then I have my trade in the top right corner. And then under that, I have my level 2 data and all the bid and asks. So I can keep an eye on where there's demand, where there's supply for the stock, right? And then on the chart itself, you could quickly close by limit order, close by market order. I always use limit orders. I never use market orders when I'm trading smaller med cap stuff. Large caps, you could use market orders because there's so much liquidity typically, and you usually get a good fill. Cool. Hopefully that helps you answer that question, John Cochran, and I really appreciate the feedback on the show. I'm glad you loved the video. Do subscribe below, hit the like button, and obviously feel free to check us out on Discord as well. Mountain Man, I have some FRC shares. Yeah, FRC has been a crazy one, but just be careful. You've seen SBNY go to zero basically. You've seen SIVB go to zero basically. So you have to be careful with the bank shares because equity holders get zero if things go under. Bond holders always get the first stab at sort of the liquidity stuff. So just be careful with the banks. I wouldn't be swinging that stuff. It's pretty much gambling. Maybe day trade scalping it here and there is okay, but You know, you never want to get, a lot of people got stuck in those trades and ultimately went to zero. So just got to be careful with the bank stuff. It's always scary when banks go under. Tiffany Fawcett, thank you so much for the time. Much appreciated. Awesome, Tiffany. Keep up the great work. Keep up the great strategies and the words. Keep it going. Predit Singh, how are you planning to protect your capital net worth in USD when dollar starts losing its global reserve status? Oh, really good question so far. Pradeep, hopefully I'm pronouncing that right. Sorry if I'm not. Surely at this point some strategy is needed, right? To be honest, I've been mainly 90% cash, trading on a really small account over the last probably year or so now. Most of my cash is in actually 2-year treasuries right now. Get a nice 4 point. I think I top ticked it. Not top ticked. I thought I top ticked around 4.4% in treasury yields. So I'm just getting that sort of return. And that's where most of my capital's been. Just taking advantage of sort of the inflation rise and at least getting something back with practically zero risk, backed by the U.S. government. So obviously if the U.S. government goes down, you know, everyone goes down. So sort of the safest trade I found out there, and that's where most of my capital's been. But to your question, what do you do when sort of the dollar's losing its global reserve status? You saw China move away from the dollar, Saudi Arabia, move away from the dollar. I think that's a bit scary. And if we continue to print at an unlimited rate, I think you're right. I think it's going to continue to have effect on the reserve status. But I don't really think that nimbly in terms of like dollars. I've always used dollars for my entire, you know, everyone uses a dollar every day, right? You swipe your credit card, you know, go to the bank, you get cash. If you live in the States, you're using a dollar. So I don't necessarily see that being taken out, right? I think 70-80% of the world uses USD as a sort of that currency translation. So I don't see it potentially being a huge problem short term, but that's why I also like the gold thing. Gold as a commodity, maybe having money in the gold index or even the gold itself, like gold bars are really valuable right now because of where gold is valued at. So that could be, as you've seen a big bid for gold. Gold and silver have been on a nice run. So those are always good places to hedge if you don't have trust, I guess, in the US dollar itself. I think those two are going to hold up. They've held up for, you know, over 100 years now. So, you know, I think it's a good position or good play as we continue to see gold outperform as well in this market. Hopefully that helps answer your question. Sean Vlog, what's your risk management on option? Like you scalp it or intraday trade it? And do you trade ODTs? I don't trade ODTs. I used to. I actually took a ton of losses on those ODT stuff. It's just too crazy for me, too stressful. I end up taking much bigger losses than I do gains on the ODT stuff because I like to trade with stop losses and feel like on those ODTs that you just get stopped out a ton and you know, there's a much higher risk for mess up on those than if you're buying multi-week out. Especially if you start to get some range and percentage. It's much less stressful when I buy like multi-week out. I can manage it much easier. I can use a little bit more size and I would use a little bit more size than I would on an ODT. So I stay away from those. If there's a lot of volatility and volume, maybe I'll do like 2 or 3 days out, or 3DT, you'd call it. A little bit less stressful with smaller size. That's how I'd look at it from like a lotto for me, if that's what you're asking. In terms of risk management on those options itself, I always like a 20-30% stop loss in options. And why 20-30% of my stop loss is my like sort of bread and butter is because if you think about it, right? A lot of people don't really realize this. If you think about it, if you get down 20 or 30% on a position, right? What do you need to just break even now on that position? You need like a 50-60% run on that stock or option or move, right? Just to break even, right? So the lower you go down, the move needs to be drastic just for you to get your capital back. So typically in options, I like to just cut it at 20% and call it a day and find another entry or just find another trade or just say, okay, I lost that trade. Let me take a breath. I'm red for the day. Let me take a breath and sort of find the next trade or, you know, maybe sit out that day if I lost money and just move on to the next. So 20% sort of my threshold on mostly all options. That's day trading options or that's swing trading options. And our options team, Harmony, Archer, and Discord, those guys trade options probably much better than I do in terms of risk management and their selective criteria and all that. So, you know, those option guys are, you know, they're more sophisticated. They write, sell calls, puts, etc. So they'll do that. So maybe you could gear some of those more option questions geared towards them. But those are typically my sort of parameters and rules. I'm sure they have similar or their own parameters. Thanks, Sean Vlog. Great question. Jeremy Colson, what happened to the GNS stock? Is it a stock you think will shoot up again? I'm not sure. The GNS thing, I think that was like the shorting, memeing thing, or I think they had like short synthetic shorts or something around that. I think it had a couple big day pops. I don't know anything about the stock. I don't really follow a lot of that a lot of those meme stuff. But typically, if you have a large short float on a stock, it's typically a dying business or need for liquidity type of business. And there's a reason a stock has a lot of short float percentage because people are betting or people have done research that the stock is trending in a downward direction. Obviously, you get here liquidity spikes and liquidity squeezes here and there. AI, Bed Bath and Beyond, I think went from like $5 to $20. It's now back to 50 cents. So a lot of these names may get that rally, short-term rally, but at the end of the day, fundamentals continue to wear them out. And you've seen names and names after names go. AMC was like 30, 40, $50. It's now what, in the 2s, 4s, 5s. So you get a lot of those sort of drawdowns with stocks that are just not performing well on a fundamental level. So I try to stay away from that stuff. It's great to day trade them because there's always good liquidity and spikes and range percentage, right? It checks box, but I don't normally swing or do any of that for those type of names at all. Ultimate Pomodoro, risk management on day trading options, like somebody asked. I just mentioned that. Hopefully the answer was helpful. Mountain Man, thank you, Spud. Have a nice weekend. You too. Thanks for joining, man. Great questions as always. Just starting learning intros to options. That was helpful. Awesome. Jeremy Colson, will Trump arrest have any effect on market? No idea. I guess we'll see over the coming days. I don't know. I feel like people are just sort of tuned out all that news and noise. There's just so much more going on. You got European banks sort of in crisis. You got some U.S. regional banks in crisis. I think there's much bigger news than, in my opinion, of course, than the Trump stuff going on. So, you got inflation, CPI coming up. You have banks. I just think there's more to talk about than some of that. If there was nothing of this going on, then maybe that would have more headline. But I don't really get into the political headlines. Jay, what was your performance in 2021 versus 2022? What were some key differences you learned and had to adjust? Each year from 2019, 2020, 2021, 2022, and 2023 so far has been completely different. 2023 specifically for me has been basically red almost all year. Sideways the last couple of months. January was a really bloody month for me. I was net short coming into the markets on mostly everything. And markets have just been absolutely resilient to the upside. So January was a pretty good sized red month for me. We got a little bit back, traded sideways the last couple months. In terms of 2021, 2022, 2022, so I had some really, really big sort of short trade alerts to the downside, whether you were shorting equity or puts. Everything was just in free fall mode. Late 2021 was mostly cash. You didn't trade a lot going into end of year. 2022 was pretty lucrative first half of the year with all the downtrends and just things just absolutely getting smoked to the downside when Fed was increasing rates and there was just the Ukraine war. Everyone was just in full panic mode. So there's some great opportunities. Now I find that 2023 is like really sort of choppy and trend and liquidity's not really there. There's a ton of professional traders, ton of traders on the street, a lot of funds not doing well. The long average Joe investor just sitting there buying long-term stuff that doesn't check their accounts or anything is probably green and doing really well. But from a trader's market, I actually finding that it's really tough to trade this market this year because of how choppy things have been. And lately it's been just a bid in tech, and a lot of it actually doesn't really make much sense, which makes it even more hard to trade because a lot of things are just doing the opposite of what you think it would do. So it's a little bit of an emotional challenge for sure this year. That's why I keep things really small, really tight. Not really trying to risk much capital this year. Just trying to sort of stay afloat and make some small trades and gains here and there. But it's been a tough year to trade for sure in 2023. And I think it's going to continue. I think we're going to have a really choppy second half and wouldn't be surprised if this market trades sideways for a few years before making like a real large move. Who knows? It could definitely do that and just stay range bound. So good questions there. Casey Carter, any chance you could walk through how you would have determined where to buy in on AI last week during the big move up? Sure, I can go back to that name on AI and just talk through the price action and chart. AI. So that's the daily chart. Actually, we could look at a daily chart. It's a good question. So see this line here. From a daily chart perspective, right? basically at $30 a share. AI topped out here. It topped out here. The third retest, as we talked about this, guys, we talked about Intel, right? Breaking that third retest and breaking the new highs. Same thing happened with AI. It broke 30, and bang, when it broke 30, had another 10% upside just on that day alone, guys. So let's go back to AI. Where was the 30 break on the 5-minute chart? 10:30 in the morning. At 11 a.m., this broke $30. And as you can kind of see, great question, by the way, once it broke $30, that's actually when the volume and range sort of picked up. Broke $30, 1%, 2%. So now it's 3% in about 30 minutes time, 20 minutes time. So to your point, to my point, when it broke $30, which is the resistance the last couple of days and weeks, that's when all the move happened. So if you're buying a 30 break here, bang, you get a move all the way to 32, 33, and that's a great scalp for about an hour or 2 hours trade. That's 4 to 6%. It's a great move in just an hour, 2 hour time. So from a technical standpoint, that 30 break was really key on that name. And I'll show you quickly again from the daily, right? This is what we call a top out wick, sell wick, top out wick, sell wick, breaks through 30, shorts cover, momentum takes the stock higher, break through 30, right? So really good question. That was a good example as well, Jay. Hopefully, that was Casey Carter. Hopefully that helped. Cool. Well, we're about a minute over time now. Looks like I got through most of the questions. If I missed your question, I tried to just go right down the list here. Feel free to ping it over via in the Discord DM, or you can write it on YouTube, or feel free to give any comments or feedback on YouTube as well. If you guys are looking to learn more, you can always see the Spud Zone Discord. Our tech team put the link on the right-hand column a couple of times. Thanks, guys, for being active. And then, yeah, guys, hopefully everyone enjoyed this session. I always prepare a couple hours for these every couple of weeks, and they're really nice to sort of go through the technicals, where we are in the global markets, where we are in the indexes, where we could see some volatility, where we want to take profits, where we maybe want to look to enter some things, what some trends are. It's always really helpful to talk through all that. So good luck to everyone trading this week. I think there'll be some more good opportunities. And cheers, trade well, keep studying, just keep repetition patterns, and hopefully everyone's sort of learning a ton and getting through these crazy markets. Cheers, guys. Take care and have a great rest of the weekend. And I'll see you all in the Spud Zone this week. Cheers.